You like this, Zach? Yeah, you play it. Keep it up.
I'm going to talk over it. We're going to get copyright
Nobody has a copyright on this.
You don't think?
The Spice King is back, Danny Stewart, back from picking the perfect peppers.
Hey!
It's Spice Rub season here at Revere Asset. That's right. Fade me down, Zach.
Yes. All right.
Oh, Danny, welcome back. It's Spice Rub season. God, we missed you.
I know you did.
So we took a bet in the office. So we do the show last week, Stock Nerds and Marco. This is my favorite season, my favorite start of the season, favorite week to do the show.
You like the turning leaves?
I love the turning
It's the
leaves.
best.
So Zach and I, Zach creates this. It's a Picasso.
It's a
It's a
motif.
motif. It's beautiful. He creates Danny's face on Indiana Jones's head.
Yeah.
And
Is that what that was?
And I said to Zach, the minute I saw it, I go, I got $5 that he doesn't. He goes, who's that?
I thought surely not. He'll recognize the glasses.
And without fail,
Yeah.
at lunch, Zach and I are at lunch. At lunch, we get the text, who's that?
Oh, so you actually took him to lunch?
It happened.
Oh my gosh!
Yes.
I'll alert the media.
I know.
That's
We
like
went to
goes
lunch.
down in my diary.
Tell
Yeah,
all the
we went to
world.
lunch.
It did
but
happen.
I said without fail that he will say, who's that? And no kidding, like on cue, you texted,
That
who's
doesn't
that?
anything like me.
Oh my gosh.
That looks like Freddy Krueger.
I've got to turn my
looks
marker
like Freddy
on.
Krueger.
It is a-
It,
No.
it did
It's a
look like
fedora.
Freddy Krueger. That's what I thought of when I first looked at it.
See?
Okay, that's funny.
Yeah, all right.
Hold on, let me get my marker energized. You thought that looked like Freddy Krueger?
I just did just now
Absolutely.
looking at it. But yeah.
Yeah.
Oh my gosh, I didn't see that.
Well, Freddy Krueger's face is kind of warped.
Yeah, and it's
did-
kind of got that angled.
It is a fun.
There's-
Yeah, it is a funny thing.
I
to
can
kinda-
see the eyebrows. The eyebrows are all you.
Yeah, the mouth is where you kind of lose it in the chin.
Yeah, it's
The-
just-
right
the,
there?
The
From like
blend
the
is
bottom
not
of the nose
awesome.
down. It's the eyes are okay. But
Yeah,
the rest
yeah.
of it-
This
Yeah,
part
the-
is all Danny.
Yes.
This is. Are you saying this part is too handsome?
That's what I.
No,
The blend on that is a little much. I think is what I'm saying.
one of
I
these
knew it was
days,
Temple of Doom
one
as
of these
soon as
days,
you said
we oughta let Zach try to make a composite of all of us.
That's what
Yes.
it should be.
Right. So listen, Stock Nerds, Market Lovers, real quick. I've got a bunch of things I want to cover with you. I want to talk about Unity software here with Hunter in 2 seconds. But Daddy,
Tim.
it's Christmas music
Oh my
season.
God!
No,
Isn't it a little early. It's not. We're not Thanksgiving yet. Happy Thanksgiving tomorrow, but
I started early.
can we start the day after Thanksgiving?
Danny, I started like November 1st.
Tim, please! You start in January. You start the second week of January. He's going out and buying.
Big Christmas in
So
July
listen,
fan, Tim.
I've got a list here, so I'm not going to do the whole list. I'm not going to. I'm not going to do more than.
And
a couple.
we thank you.
Well, I'm going to do 2 songs every week until Christmas, maybe New Year's. Depends.
2 songs a week?
2 songs a week.
We're playing
And-
these on the show.
I don't think there's any so here's the deal, Stock Nerds. The audio only has no copyright infringement
No.
issues.
Yeah.
The YouTube audience does. So Zach's going to fade me, okay, or we're going to talk
Yes.
over it, and then we're going to
Yes.
give it a listen, like right at the beginning.
Yeah.
Danny, some of these are so awful, and when I say awful, so before the show 2 weeks ago.
They're awful, so we're playing them.
We're making this a weekly bit.
We're going to make the listeners suffer.
No, because you wouldn't believe how awful, and you wouldn't believe the lyrics. Now, the song I'm not going to play. I've
These
already.
are clean enough to play, right?
They are.
Okay.
That's the thing. They're clean enough, but they're just awful.
Okay.
Like some of them are good.
Okay.
So Danny, the song. Now everybody knows that song. I'm not going to play it. Bing Crosby, David Bowie. Peace on earth. Can it be like that? That Rum-Pa-Bum-Bum, Little Drummer Boy duet they did back in 1983, I believe. Right? David Bowie, Bing Crosby come together. It's a beautiful song. The song right before it that I'm not going to play is by a fella named Tom Waits. Does anybody know Tom Waits?
Yes.
You do?
Yeah.
Okay.
The piano has been drinking. Yeah.
Okay, the song I'm not going to play is Christmas Card from a Hooker. And so,
Okay.
and it's
You
awful.
should- right. That would not be good for the show. You shouldn't play that.
It's not even.
I
it's-
appreciate
it's
that.
not. It's the lyrics aren't even dirty.
Okay.
It's just awful.
Right.
Like it sounds awful. He sounds awful. The fact that they took studio time to record it is awful.
Yeah.
But I've got some other ones here for you, Danny. I'm going to play one. We did one. I don't think so. Don, Spinal
Yes.
Tap made a Christmas song.
I love it.
I knew it. I knew it. I know
Turn
my
the
audience.
speakers up to 11.
All right.
and Crank it up.
Yeah, I'll turn this up.
Let me see if I can find it here. I just
All right. Okay.
Not to be outdone by Twisted Sister, we got Spinal Tap.
For
Is that-
sure. Yeah.
yeah. Hold on.
I'm assuming they're heavy metal.
Spinal Tap made a whole album.
They made a whole album.
They made a whole.
So that
So,
intro.
so,
made a
so for
movie.
people, for people who don't know, Spinal Tap is a mock band, right?
Right,
From the
fake
Rob
band.
Reiner film.
Hey,
This is
pump me
Spinal
up.
Tap. They're not actually a real.
This is Christmas with the Devil.
Christmas with the Devil.
This is
And
the
we gotta
new
keep talking
Danny.
over it because
This is the new Danny Spice King.
Yeah.
Like there's the Tiger King.
Right.
We got the Spice King.
Yes, we can narrate over this. For
I don't
YouTube,
get
but-
the
that's-
tie-in, but
Yeah.
but
Can we
whatever.
do Danny as the Tiger King except the Spice King
No,
this
this
week?
week we're gonna do something Thanksgiving.
Give him
right?
a cornucopia.
Pilgrims
Give him
and
give him a pilgrim hat.
The Tiger King
Okay,
haircut.
no,
We were talking about a
the
pilgrim hat.
Spice King. So the thumbnail this week is the Spice King on the Mayflower.
No. Pilgrim hat
Where am
holding
I-
a pilgrim hat holding a pepper.
Where am I gonna get a picture of the Mayflower?
A pilgrim hat
Where we
holding
get
a
all our
pepper.
pictures from,
Right.
The internet.
Internet, yeah.
Okay, so this is an awful song, right? Like, and so I've got Van Danny. This list is 50 deep.
Danny, I think Tim might be a little out of control.
No, this is the best thing that ever happened to me.
started.
I discovered this.
He gets giddy. He's worse than the kids. He's worse than the kids taking him to see Santa Claus.
Tis the season. Yeah.
Hold
All
on,
What, you got one more of these?
I've got one more.
One more of
I'm
these.
trying
Okay.
to find.
We gotta get some
I'm not
charts.
going to do Bob Dylan,
Oh, okay.
but I'm going to do Bob Seger and The Last Herd.
All right. We definitely got to talk over this.
Sock it to me, Santa.
All right.
Okay.
Okay. Let's Bob Seger. That's who this is.
Bob Seger.
Okay.
People who you thought would never make a Christmas album.
No.
Well, I wouldn't think that. Who was the one? Dylan. He's kind of got a scratchy voice. That's kind of hard to do that. But we got to keep talking over it so
Yeah.
nobody can understand.
Yeah.
It's awful. Here, just pump it up right here.
All right.
Well, we got to keep talking.
Oh, we gotta keep talking?
You can't let it. You can't let it just play. Tim.
Oh, we can't just let it play?
No, they'll cut us off.
Can
That's why it's pointless to kind of.
Can
do
I
this,
jump?
'cause
Can I jump to the
talking.
place where we can get 10 seconds of unedited?
You can't do 10. You can do 4.
Can I do
I can
That's
do
why.
it.
That's why the whole.
Yeah.
4 seconds?
Yeah, but if you
seconds.
go over by 1/10 of a second, they cut it.
Oh, I'm
So,
with you.
yeah.
I'm with you right here. Give me a second.
All right.
Hold
our
on.
live
The
production
lyrics
is,
are here.
All right.
Um,
Yeah.
Okay.
Keep it nice and low. How about that?
Here we go.
Yeah. Okay.
All right, you got
Oh,
it.
yeah. You ready?
When is
Hold
it?
on.
Where is it? There it is. All right,
One more.
there we go. Yeah, all right.
Okay, bring it down. Okay, so if you couldn't hear that at home, it's turn it down now. So I say, come on, Dancer, come on, Prancer, a brand new Santa's got to be the answer. Oh, come on, Comet, come on, Cupid, don't just stand there looking stupid. He's got a red cape and a white mustache. Sock it to me, Santa.
Wow. It
Those-
ends- yeah.
Somebody
Terrible.
took the time to write this, Danny. I've got a whole season full of this. So listen, Stock Nerds and
Thank
Market.
God we only got another month, and we're
I
only
think-
doing 2 a week.
I think the novelty of Christmas music is exciting from a marketing perspective, but imagine making something so bad it actually gets immortalized. And then every year people come around on how
Nobody's.
terrible it
I'm the
is.
only person in the history of time to play that song.
Everybody's trying to make the next grandma got run over by a reindeer.
I don't think it was a spoof.
You think that was intentional?
I think Bob Seger
like you think that was a stab at good.
if you heard Bob Dylan like I heard Bob Dylan last
Yeah.
night, he tried. He was trying.
well, but Bob Dylan trying still sounds bad.
That's
That
right.
voice.
he was trying to bring Christmas joy.
Yeah, I thought it was tongue in cheek.
And whoever created the playlist on Amazon, it's a playlist on Amazon. Whoever created
What's it called? Bad Christmas songs?
No, it's called the Classic Rock Christmas.
Classic rock.
And I didn't make it. Like I didn't go searching for it. I'm like, oh, what's this Classic Rock Christmas? The first few songs are like normal. Like you're like, oh, I know this one.
Yeah, the Eagles would be.
Yeah,
on
yeah,
there.
yeah. Please
right.
come home for Christmas.
Yes.
Yes.
Yeah, sure.
Your friends and relations.
Love
yeah,
it.
yeah, yeah.
Great.
Yeah, great tune.
Then you get into this.
A little Elton John, and then they hit you with like these weird ones like Spinal Tap, and you're like, what? Who did this?
Yeah.
So super interesting. So Stockton's Market Lovers. Look, we had a great show last week without you, Danny. Sans the Spice King, who was off on the Santa
It was a
Maria.
tough time.
Was it the Maria or the Pinta? The Pinto. The Pinto.
Pinto.
That's where
There's
it
a bean, the pinto bean.
Yes,
Yeah.
that you were off floating, looking for the perfect
Forward
pepper,
Pinto.
at picking them at the ripe of freshness, the peak of freshness.
Peter
You're right.
We have
so
this spice thing's really hyped. People are excited about.
Well,
the
we
spice
got
run.
emails.
Yeah, I know.
we
And I
legitimately
want to thank you, Tim.
no. If you
I had to go to the
want,
post office multiple times last week.
if you
Well,
want
good.
some
People-
more
it's in demand.
spice rubs, Stockner's Market was whether your client, whether your friend, whether your first time listening. No joke. Danny sends out every holiday season his custom blended spice rub that he makes with his wife AK, and people love it. Like they legitimately love it. We joke about it, but it's a passion of Danny's. Like how do you get the peppers? I'm not joking. Like, do you grind? I'm actually asking.
Well, actually, the reason it's a lot easier now. So when I used to first do it, I'd go down to the Mexican market downtown in San Antonio, and then when I moved up here in 2008, downtown, everybody has a market, a big market. There's a section where you go to the Hispanic section, and they'll have a big bag, and I'll go over there and I'll say, I need lots of these pasilla chilies.
Okay.
And he'd go, well, and this is all he has. He said, well, how much do you need? I said, 2 garbage bags full. And he looks at me and goes, come back tomorrow. And so I come back tomorrow and I buy all of them.
And he's got them,
but the problem is I would have to devein them. I mean, they're already dried, but I'd have to devein them. And if they weren't dried enough, I'd have to,
take the seeds out too?
Seeds out. My hands were orange. It would take me a week. My hands would be orange for a week and I couldn't rub my eyes. And so, but finally I found this place that actually you can get any kind. You can get Madagascar vanilla beans. You can get
like wholesale
smoked serranos. Because it can be whole or ground.
I'm sorry, let me help you out. Serranos. Go ahead.
Serranos. Oh, there you go.
Hey,
smack
dunked.
Yeah. Anyway, and you can literally order. So I can now order 5 pounds of ground pasilla chilies.
Right.
And the quality control is awesome. Before
hit or miss?
Sure. It was,
So listen, if you want, you know what, let me pull this up right quick here, which I failed to do before we jump to the show here starting. Which tab is it? Oh, there it is, the Revere Asset tab. If you want Danny's spice rub, Danny will send it to you. We love interacting with stockers, market lovers. Look, our show grows. It's growing on YouTube. It's growing. The audio channel is growing much, much quicker than the video channel. Which
thanks for sharing.
Which surprised me. Yeah, and so the fact that you guys listen every week is something that we're incredibly thankful for. It's why I end the show every week with "We love you," because we do. Like, without you listening on the other end of this microphone, there is no us. And so thank you for that. If you want it, Danny's Spice Rubs, right here's the address. You can email him, dan@revereasset.com. You can call. You know what? Email him. He'll send it to you. It comes in a little plastic pouch, and most people love it. And so,
what's funny is I got like 4. We have new clients that hadn't been here for a whole year. New clients, they emailed me and said, "Hey, I'd like some of that rub," and I said, "You're going to get some in about a week anyway."
Yep.
All clients get it automatically.
Well, of course. So it's a holiday tradition. It's like Jim Nance, a tradition like none other.
That's nice. It's a little something. Yeah. Hey.
And so but it's uniquely us, and that's the whole thing. Like, no one, I don't know anyone who sends out a Christmas spice rub.
Yeah.
Right. Like, some people can send out a Christmas card. No.
Or a fruit cake or a candle.
That's right.
Yes. No. We do a Christmas spice rub here, uniquely Texan. Yeah. Okay. So, Hunter.
By the way, speaking of uniquely Texan.
Yes, sir.
I do like the colors you're wearing, Tim. Those are nice.
What, these are just maroon 5 in it.
Maroon, Aggie maroon.
Oh, is that what this is?
Almost
Aggie maroon, baby.
Little Jimbo Fisher coaching watch.
Little Jimbo Fisher.
Hey, Hunter. Can you bring up the quarterly margins for Unity software while I talk here for a second, please? So last week, Danny, we legitimately had a great show. I felt like it was one of the best shows I've done. And
it was surprisingly fun. Yeah, really good.
And surprisingly,
thank you, Zach.
Well,
surprisingly,
no, because we started the show.
I just got that. Surprisingly, like, hold on, the producer, nobody more shocked than me, but you guys actually had a decent show.
Wait a second. I was mildly interested.
Wait a minute. Look,
I did not off.
Normally, I'm just over here surfing the web, but you said a couple things that made me go,
oh, all right. Look, you opened the show and you said today's show is going to be about margins, and I thought, oh no, a snooze fest, right?
Wow,
it worked though. It was great, right? Am I wrong? Everybody had a good
make
time.
margins
We
fun.
got emails about it. We had a fun thumbnail. Like
that could be a new segment. Make margins fun.
So
it's true,
because the screening process to get to these stocks and eliminate FOMO. Anyway, it was a really good show. If you want it,
how to have fun with leverage.
It was great. We should do that.
Fun with leverage. Start out with UVXY.
Yeah.
Oh my gosh, fun with leverage.
Okay.
So this is the podcast right here. You can find it in the daily. You can find the video in the daily market insight, but right here is the audio version. One data point that could lead to huge stock market gains. And so I was using a pre-tax annualized margin number. That's the number I've used for years in my screening process. And so one of the fellas, and it might have been, I don't know if one of the fellas during the show, I think it was Don, we were talking about quarterly earnings or what do we do? Like, do you advocate for just an annual report? And I advocated for just an annual report, so you're not just trying to skew the numbers quarterly. Don wants them every other day, and a mild exaggeration, but
just once a week,
once
not every other.
Yeah, once a week. And so, and I couldn't find on the air. Like I was going through my mind, like, why would I want a quarterly number? And then the moment the show ends, Hunter brings up the best point. So, Hunter, what is Unity software? And let me bring up this chart of old Unity. What is Unity software's annual number? I believe it's like -7. It's like
minus 17 when we looked at it last week.
Yep. So let me write that down for you. So it's minus 17% margin annualized. And you can see this is a great looking chart right here. 76 hits 210. Now it's back at the mean. If you're a risk on type person, this to me is your lowest risk. This is not advice, by the way. Nothing we do here is advice. If you want advice, take advice. All you have to do is give us a call, 855 Real Wealth. Okay, so at the 21 is, I believe, your lowest risk entry in stocks.
It's also the previous highs, Tim. The 21 is right at like 174 on the left side of the chart. That was the initial highs back at the beginning of this year or / end of last year.
There you go.
So you got a little bit of a dual area of support you would like to see.
Beautiful.
Anyway.
So then I said minus 17%. That's kind of interesting because we went through a litany of stocks. We started with like some Dow and some industrial type names. We started with stocks that might go private because Casper Mattress went private, and then we rolled to the granddaddy of them all, tech stocks. And then Hunter after the show says the quarterly numbers for Unity's margins. And would you read them off, Hunter, please?
Yeah. So the most recent quarter end that we have here in MarketSmith is -4%. The quarter prior to that is essentially -1%. The quarter prior to that, -9.4%. And the final quarter that we have on here, the trailing four, is -38.1%. So that -38.1% was obviously skewing the more recent data by a pretty good bit.
There you go. And so this is what we would call improvement. Right?
Rate of change,
right.
ROC. That's the most important.
So this is a great case for using quarterly margin. Can you identify what Danny just said, the rate of change? Can you identify an improving situation? And
I want to clarify real quick for people that just tuned in. You're talking about profit margin, not margins like investing in margin and stuff.
No.
I know, but people that just tune in, they may not.
Oh, right. Well, go back and, hey, you can't miss a week. You can't sleep. can't
right. You can't go on vacation. You got to listen.
Can't sleep on the show. Hey, you go on vacation. You know what?
You may miss the next
Steve
dual
Jobs.
support stop.
Steve Jobs invented the iPhone so you could listen to us on the go.
That's why.
And so, yes, that's exactly
why.
Yeah. And so this is a great case for using the quarterly number, so you can spot that. And so I think bringing that forward to stock nerds and market lovers is a great addition to it. Now, what do I prefer? I don't know if I have a preference. Like spotting the turn in something is pretty exciting. Like I've always used an annualized number. It's just easier, and I don't think it's hindered me too much. But like Unity software is clearly an improving situation. And a stock that just recently hit highs and now is at the mean, that you want to identify those. There's other impeti.
Impeti, Don?
Impeti?
Ruling Don? I don't think it's a word.
No.
Whoa.
No.
Hang on. Tim, how would you, Tim Sniglet, how would you spell that?
Impeti?
Impeti.
Well, spell impotent and then add a tie to the end of it.
I thought that was like the plural of impetus.
I think it's IMPUTI, impeti.
Impeti. Yeah.
Impeti.
Like there's impetus. Like there's.
I know where you were going. Unfortunately, I can understand you, which is really scary.
The Latin root.
I mean, that's the scariest thing.
Everybody-
He makes perfect sense to me. I've been working here too long.
Danny was this Nobel scholar, and now he just rules.
And Tim dragged me down in the mud.
Fall from phrase.
Because everybody knows the Latin root of criteria is criterium, and everyone else also in the same vein
Stimuli.
Right, knows that impetus, impeti. Which also, by the way, the reason why it's so hard to learn English is because if you have multiple impotent people in a room,
impotent, speak for yourself.
Well, no, then you have an impeti room, and so everybody, everybody knows that.
Right. And actually, I'm going to go on a limb here. I'm going to defer to Don, the English master. I think it's impetus and impetus, both singular and plural.
Like deer.
Depending on the use.
Yeah.
Depending on the Don, is that right?
It's weird.
I will say this: the noun impetus generally does not have plural form. It refers to an abstract concept. And as is the case for most nouns with this semantics in most other languages, abstract nouns like impetus are not countable.
Wow.
English is hard to learn.
It almost gave Tim a little bit of a hall pass because there's no plural.
Right.
So, like, when people say
plural form
all
impetus,
the various impetus helped
said,
us make our decision.
Yes.
There we go. Use it in a sentence, Dan.
Here we go. So,
plural form of impetus is impetuses.
Impetus.
Really? That
sounds dirty.
That doesn't
That sounds dirty.
Right
Yeah, we can't.
So there's other impetus that make a stock go higher, and you want to be able to identify those. And the reason why we're fans of William J. O'Neill and Investors Business Daily is because Bill identified those 7 common criteria that help us, not help a stock. They are the foundation of why stocks go higher. Other than
the variables that drive the market price.
And it's not about what about Reddit? What about short squeezes? No, it's about consistency. Like anyone can be a one-hit wonder, and you can make a ton of money. And look, I'm not begrudging anybody who makes money, as long as it's legal. But I don't begrudge anybody. Whatever your system is, whatever your strategy is. But these 7 common traits are they just show up every time. And you're trying, as a trader or an investor, you're trying to limit your choices. You only want to buy the best because you're not forced to buy equities. You only want to buy the best. And so the best aren't, the best go up in price, and they're predictable by pattern. And so there's things that you can help yourself identify. And margin, for me, is one of them. But there's sales and institutional support, a whole bunch of other things. If you ever want help with that, you can call any one of us or email any one of us. But look, Unity is a really great case. There's a plethora of others that we could bring out here. But right after the show, we were just talking. And
give them the ticker on that.
It's Unity, letter U. Letter U for Unity. But look, I had that's where I wanted to start the show. But I wanted to talk about... really, I don't have the segment I really wanted to do to start the show, but it felt like a downer, and I don't like to do that because look, we're
upbeat place.
You don't come here to get Alex Jones. Like you don't come here to we're
not doom and gloom.
No.
Yeah, no.
No, like that's I'm the antithesis of that.
Yeah.
And so like I think I know life's hard. Like I don't need to talk about how difficult it is every day for you. I think people do come to our show for a little bit of escapism.
Yeah.
And
to improve their lot in life.
Yeah. But I make fun of the Cathedral of Finance because you got to show up in a shirt and tie, and it's so mundane. Like it's so awful. Like we cannot joke in the Cathedral of Finance. We cannot have fun in the Cathedral of Finance. We have to be always serious, giving red meat. And I always think those are the people that get coal in their stockings because they just keep buying UVXY. And so, listen, if I cannot stress this enough, UVXY is the devil. Like if you had the angel and the devil on your shoulders. Right, the devil would be UVXY. Like UVXY is the temptress, like, hey, don't eat the fruit, but there's volatility. Don't eat the fruit, but there's volatility. Like you wanna stay. I can't. My gift to you this holiday season is no matter what, stay away from UVXY. It doesn't work the way you think it does. And so, and there's a public service announcement for UVXY. Now, lowering of expectations. Look, I saw this, and I'm gonna try to infuse this with a little humor. You ready, Daniel? Look at your screen.
Nervously ready, yes.
Yeah,
there she is.
So Janet Yellen announces Americans can use promo code THANKS for 10% off for all U.S. goods and services. Clearly, now you're going to read it. Okay.
I'm going to read it.
Now he's going. Now
I see what publication
it's the Onion,
this is
of course.
from.
It's the
Aha,
Onion. Right.
yes, it's the
right.
Onion, yeah.
And so, but that feeds into, so that's a fake story. Mm-hmm. What I'm about to show you is real. Mm-hmm. I feel like that's the intro to like, what we're about to show you is real. The names have been
Rod
changed.
Sterling.
Is that the Twilight Zone?
Twilight Zone.
Yeah. And so, look, what I'm about to show you is real. And this is a problem. It's going to be funny at first, but then I'm going to get a little bit serious. I'm going to explain to you what the problem is with this.
Things can be funny and scary at the same time, right?
Oh, you know what?
That's a reasonable way to feel.
That is a great way to. That's a great way.
I laughed through all through the first Halloween.
That's right. Things can be funny. Things can be funny and scary. It can be funny and sad.
So we'll scroll through Danny, and then we'll come to. I saw
That's
this.
not me.
No, I know. I saw this on Facebook, and I want to read this to you. If you're listening, I want to read
disgusting.
what. They see. I knew this would get Don's ire. I didn't do this for Don. I didn't do this to get Don's ire. That's not. I want to talk to you about this because there's.
You did.
You'll have your chance. I swear. I set people up with as a point guard on the show, which is if I try to dish the ball. I try. I try as the person. Look here, Danny doesn't understand basketball. As the person pitching batting practice, I try to not throw balls that miss. I want him in the strike zone.
Trying to feed. You're trying to give a good feed and let him get a layup. I got it.
God almighty.
Every once in a while, I get a 3-pointer from Hunter.
That's basketball again.
Yeah, there you go.
Okay. And
to put it in terms Danny would understand, are you the rodeo clown?
I'm trying to get.
Now that's what we need to do on one of our things. Tim as the rodeo clown.
That's not bad.
The little teeny cowboy hat, the red nose. Oh yeah,
a lot of practice with that.
And
so I saw this
something, and then ducks in the barrel.
Yeah.
I saw this and I thought this is awful. Like this is someone's Facebook post. This isn't me. So someone had the news becoming more useless, and then they typed out NBC's tips for dealing with inflation. If you don't get a turkey, fewer people might come, and that would also save you money also. And I don't know who this person is on the screen.
A screenshot from like Good Morning America or something.
Yeah, I think it's
consider not.
I think it's the Today Show. Okay. And so Thanksgiving costs. So everyone knows that inflation is here. Like when they're talking about it on the morning shows, the morning news programs. If you're not in America, the morning news programs are news light. Like they're not news heavy, and so like they're not giving you hard hitting stuff.
They're editorials, man. It's all opinion. Let's just get down.
Advertorials.
You're right.
Sure.
They really are advertorials.
That's true. Yeah.
And they're the biggest money. They're the morning shows for the big three networks in America are the biggest profit centers for those stations. That's why
I'm surprised people even watch.
That's why they run it. It's the fewer and fewer are, but it's still. That's why seriously, Good Morning America has a noon hour now. Like they take a break, they do a 9 to 10 hour, take a break, and they come back at noon.
Really?
It's like the B shift. Who's working? Al Roker's not on the noon hour, right? Like he's A string, right? He's in the morning.
No,
he's out of there by
they
11.
had this whole thing. It's the Today Show pioneered it with Kathy and Hoda.
Oh yeah,
Kathy, and so they'll keep it going. Heck, Danny, the Today Show has a Sirius channel where they just replay this darn thing. That's how much money these shows make. They just need that content rolling because it's an advertorial, and the more quote unquote ears and eyes that see it, the more they can charge rates.
Sure.
And so they just need it out there.
Sure
anyway.
All right.
I'm sure they have a podcast.
But this ties into investing. This doesn't tie in. It might get your ire up, but this is there's a couple funny things. So let me do the funny first, okay? People do this for Thanksgiving, right, to control cost. Anyway, potluck and side dishes. People bring their own dishes all the time. You can't see it because somebody circled over it, but it legitimately says, ask to split the cost. Pause.
Wow.
Imagine you got your aunt and uncle coming over for Thanksgiving dinner, and you charge them a cover at the door. That's what this is asking for.
Yeah.
That's $10. $10. Oh,
hey, did you
bad Uncle Charlie? You're 20.
Did you bring the kids? Yeah. Hey, it's one slice of pie, people.
Right.
That's what we're talking about here. And look,
right.
before someone gives me, Tim, you don't get it. Not everyone has the means. Look, I am very aware and empathetic, okay, to what's going on here. But there is a bigger problem with this simple screenshot. And then, oh, by the way, consider the quickest way to not waste money on a turkey, which cost, like the whole meal cost extraordinarily more this year than it did last year. Just don't buy one. Hey, Danny, now, case in point, do you know how to save the most money on a car? Don't buy one. Yeah, if you want to save money on a car, don't buy one. Now, what this slide is doing here, what this screenshot is really doing, and what we do not do in America, or we shouldn't be doing, is lowering expectations. See, this is the problem.
Right.
This is the problem right now, stock nerds and market lovers, and I'm going to get this to your investing world in a minute. There is no way in God's green earth we have the stock market we have. We have the capitalistic system, whether it's perfect or not, that we have in America. There is, Unity Software, Tesla, Google, Amazon, Facebook, any company, name it, had the ability to start here in America because they had high expectations. They had the ability to think bigger. Can you imagine if, with a grotesque example, if in World War II we said, because fighting for your freedom and fighting for other people's freedom is hard, and it costs dearly in terms of people. Could you imagine if we just lowered our expectations and said, well, Hitler only went to surrounding countries. He didn't go here. We, as a nation, cannot lower our expectations. You might not think that this is a big deal, but this is conditioning.
Oh, absolutely.
When we become conditioned to accept less, we do not achieve. And I want you to spin this to your personal life, stock nerds. When you accept less out of yourself, less than your best effort, less than what you want to do. What if your dream was to become, I don't know, whatever it is that you wanted to become, maybe a football player in college. Maybe you just wanted to go to college. Maybe you wanted to be the best at your job, the best in your field, whatever it was. But it took a little work. And you're like, well, you know what? The people around me aren't the best at their thing. I'm just going to, you know what? The easiest thing to do here is not do it. That's what lowering expectations is, Daniel. It's just saying to yourself, it's making an excuse. Lowering your expectations is making an excuse. It's not figuring this out. And I want you to think about this. Now, a lot of things cost more. And I believe that Zach and I had a really great conversation at lunch last week.
Yeah.
And he's like, this inflation thing, let's talk about it. I believe, now you can talk about supply chain. I'm going to zero in on energy. Energy costs extraordinarily more. And it's a tax on all people of all income levels.
And it's a regressive tax.
It's yes. And so,
meaning it hits the lower middle class more.
We figured this out. We didn't lower our expectations when a cartel of countries had us by the knees. We didn't regress and say, oh my gosh, can we, I tell you what, every day, let's just pray that those countries that don't care for us in a foreign land keep pumping oil so we have some. No, we sent America's best and brightest to schools. And you know what they did? They figured out that we are energy independent here in America. They figured out fracking. Do you know what a miracle fracking is? Like, we've got rocks, and somebody looked at rocks. Like, I got shale back in Pennsylvania, right? A lot of shale in Pennsylvania. And someone looked at that shale and goes, I bet you there's oil in there. How do we do that? And they didn't just settle. When you lower your expectations, you're settling. And whether it's in your professional life or your personal life. And let me hit you at home. Like, if you're like, Tim, shut up and tell me the stocks that are going up on Monday. Great. That's what Hunter's going to do. Alex does the stocks that go down, Hunter does up, and then Don comes in and sweeps it all up and puts it in a great package. We're getting there. But how many of you are disappointed in your personal relationships right now? and you settled. And you're not happy with your life. Now that hits home, because the best way to say it is, as a divorced person, me personally. Now I'm not currently divorced. Thank God somebody took me in. Her name's Tanya. She's. I'm sorry.
I gotta send her a Christmas card
for our Spanish speaking audience, Tanito. Thank God.
What was she thinking?
The jury's still out on
There
this.
was a language barrier.
There's a language barrier.
Look, I'm so glad that I didn't give up on love. I am so grateful. And Danny knows how difficult my life was. Danny knows extremely well how hard it was. But thank God I didn't settle. Thank God I didn't lower my expectations and just say, well, this is the way it is. No. You get knocked down, you pick yourself back up, and then you figure the way out. There is, stock nerds and market lovers, there is a way out of this pressure you're feeling, this inflation. But the way out is not by settling. The way out is not saying we just won't do this. The way out is forcing change here. The way out is demanding more access to your freedoms,
and what we need to do, the right thing to do.
Well, yeah, and look, if you like, well, Tim, you brought up fracking and fracking's dirty. Look, we have agencies that are designed to protect us. If they're not doing their
job, become cleaner and cleaner every year. That's
but think about it. Like, we're going to I like what right now. A lot of people don't want to say this, but a lot of electricity is generated by coal.
Most of it, yeah.
But do you realize that within like a short 10 to 15 years, because people, let's not limit to America, because people aren't going to settle. They're going to not consider buying a turkey. They're going to find a new way of producing electricity that we don't even know about yet. And it's going to be revolutionary. And it's going to be like, oh my gosh, this is amazing. And it's going to be the next leap forward. It's going to be akin from going to the horse to the gas to the combustion engine. And that combustion engine, then it's going to be the light wave from the combustion engine to the jet engine. We haven't done it yet. But what if the collective, what if the brightest minds in the world just said, it's too hard. We're going to settle. And I'm telling you, this right here is a dangerous precedent. And I'm going to go out on a limb and tell you that if people around you have this mentality, they're why you're not getting ahead. Just don't surround yourself with people who settle.
Well, we got to find out the solutions. But when you're talking about messaging, right, the new message out is that, well, the good news is we're moving away from oil and dependence on the Middle East. I read this yesterday. Mm-hmm. So we're not going to be, right now we're begging them to lower the price, but we're not. And by the way, we were energy independent a year ago. We were the largest oil and gas producer in the world, and not having to bring any in. Now we're dependent on those countries again. For whatever reason, but here's the thing. Now they're saying because we're going to go all electric with this new huge bill, we're not going to be dependent on them anymore. However, we're just changing chairs. Instead of being dependent on Saudi Arabia and the Middle East for OPEC, we're going to be dependent on China because they control most of the world's lithium reserves, both in Africa and in certain areas. And the electric battery is dependent on lithium. So it's like you said, it's in the messaging. Hang on.
I want to get off of energy. This isn't.
No, I'm moving on. I'm moving on here.
You
for a
are.
minute. I am. So payrolls came out, like you said, the messaging. Payrolls came out pretty high, and they talked also about the increase in wages went up 0.4% this month, and year over year they're up 4.9%. Problem is, inflation went up almost 1% this last month, and it's up 6.2%. You're now getting a pay cut every month.
Right, but people know that, and so here's the thought too. This isn't political. It might sound political. It's not meant to be political, and energy is just one example.
Right,
but we have a really big issue here. By the way, the point's going to be here. Markets are within a whisper of all-time highs.
Sure.
Okay, so you need to be able to separate a few things here mentally, and it's kind of one of the reasons why we're talking about it. But you should be concerned. Not just for this inflation, the GDP went down. Another revised estimate.
Right.
And we talked about this the first estimate that came out for GDP. we have pumped trillions of dollars into the markets since March of 2020, April of 2020, only to get a 2.1 GDP. I don't know if I have that number. I might have just written the number down wrong. Someone can back me up on it. The GDP should be astronomical. Should be 6 or 7.
And remember, some of the inflation's built into that GDP, so it's inflated by inflation.
And we've got strong spending here in this country. We're a nation. 70% of our spend in this country is all service-based, consumer-based, and spending strong. Well, Tim, that's because people aren't working. We can't meet our GDP if people don't work. Things are tied up in the ports. There are policies and people who settle, and one of those needs to change, and so maybe both. And so, the GDP is a struggle. Like the GDP that struggle is real, and if you put more money into the system, which is about to happen. It's going to make this problem worse. It's going to exacerbate the issue. More money right here is not the answer. You think things are inflationary now. Have them go to what would it be if they injected more money into this? Like what number? Stimulus. Stimulus 10.0. It's going to make it worse. It's not going to make it better. And the things that people need to drive the GDP up. Lower energy to get to work. Lower used car prices are still at all-time highs. Eventually, the money you saved by not spending so much at home, savings are up. The money will be depleted. Well, Tim, then we'll just go back to work. Well, what if you mistimed that? See, what brings inflation down, Danny? Good policy, right?
A recession.
Or a recession. That's exactly it.
Kill the economy. I'll kill inflation.
Yeah, a recession.
Well, look. Back in the back in the 70s,
right?
In the mid-70s, when Carter came in, they talked about being kind of bearish and the Fed started talking about raising interest rates, but they only raised them like an eighth of a point, and guess what?
Right.
Or a quarter point. But they were throwing money out of airplanes. They were printing money like the cat. So nobody trusted that they would raise rates high enough to kill inflation until Volcker came in. So point is, right now, the Fed is kind of talking like a parent, like they're saying, well, we're going to start tapering, we're going to start. But now you got all this spending again. Nobody thinks they have control.
And if you don't, like Tim, well, and maybe you don't know. And I'm not
money supply.
I'm not being facetious when I say this. So oil came down on the threat. Here's a chart of oil. Oil came down on this is crude futures.
The announcement?
On the threat of we're going to release some strategic reserve, right? And look, there's a number of ways you can look at this, like oil,
which is 3 days worth.
Had a reversion to the mean. It got close. There's that third ATR, really couldn't get back up there, reverts down to minus 2 ATR. But on the announcement that they're going to, right, buy the rumor, sell the news, or sell the news. Whatever.
Went up.
Yeah, it went up. It's gone up. It's going right back to the mean. Now, I don't know if that's a shorting point for folks or not, but they announced we're going to release it, and that's the thing. These are just Band-Aids. And settling, and soon you're going to hear, this winter, when it's a cold winter, you're going to hear, well, just turn the heat down a little bit. You don't need to be warm, and people are going to be making choices, and that's not over dramatic.
Well, one state that's going to have a major problem because of the energy cost. One of the energy companies announced that it was going to raise prices by 20% or something.
Yeah.
One of their recommendations was that you put your heat down to 62 rather than 68 or 70.
Yeah. We are not now. Every other nation can speak for themselves, but we are not. We were settled by settlers, but we are not a nation that settles, and we should not tolerate this attitude of do without. This isn't like you're going to do without a Maserati, but the basics of heat, food. Didn't Hoover run on a chicken in every pot? What president ran a chicken in every pot?
I I think that was the guy before.
That's prosperity, by the way. Whoever Harding, whoever. Now I'm just throwing out names that pop in my head.
That's close. You're in the right. Google that.
Yeah. Right. Like a chicken in every pot is prosperity. Telling you not to go buy a turkey because they cost too much is the antithesis of prosperity.
Mm-hmm. Make it out of hot dogs.
Do you realize that the entire 99% of the retirement system in America is based on prosperity? 401ks, IRAs. They're based on the stock market of capitalism working so people go buy goods and services, not settling.
Wasn't there a president that had a plan to not, or it was like no drive Sunday? What president was that?
I don't know who said no.
I think it was during the oil crisis back in the 70s. Was that Carter that did that?
He did a lot of things, but we should look. I don't want to make it political.
That goes to your point.
Yeah, no, it is. Yeah. No, or 55 came in, drive 55. That's where the 55-mile speed limit came in, and they would get famous people to tell you that don't drive 55, and saves gas.
I never knew that.
That's where it emanated from the oil embargo.
Chicken in every pot seems like it's incorrectly attributed to Herbert Hoover's campaign in the 1920s.
Tim got one.
Apparently, it goes all the way back to the 16th century with Henry VI.
Prosperity.
He said something about his peasants wanting to have chicken in every pot.
I'll tell you what, though, if you're thinking look, whether you like the person in office or not, people like prosperity. I'll give you a secret in life. If people like prosperity, they like optimism. If you find yourself alone, by yourself, dour, consuming a ton of Alex Jones, I will tell you that there's a really good chance that you don't have a large circle around you of people that enjoy interacting with you. That was a blanket statement that I'll probably get crucified for. But there is a solution. It's called prosperity. It's called optimism. It's called how do we think our way out of this? We are inventive people. We don't just settle. Can't stress this enough. Look, Danny, I've been sitting on this for a while. I'm going to switch topics. You cool with that?
Please.
Here we go. I've been sitting on this for a while. By the way, the guy who wrote this book is his last name is Wigglesworth. I'm not making this up. It's the history of the index fund, which I found really interesting. I've been sitting.
Charles Dow, or which one?
No, all. Okay, I'm going to go with all of them. But it's how index funds came to be, like how they were brought to market through services like Vanguard. Vanguard wasn't the first. But let me see if I can find the name here. Robin Wigglesworth is the brother of J.J. Snuffington III. But Robin Wigglesworth is a real human being. Anyway, his book is Trillions. Trillions is a majestical, the reviewer says, delightfully written story about the history of the index fund. But it gets really verbose here in the review, and that's what struck me.
Yeah, please don't read it. We could summarize it. Charles Dow from Dow & Company did the Dow first, and then Standard & Poor's came up with the S&P, but go ahead.
This is how Danny, this is why nobody talks to Danny at any party or soiree. Because
I got lots of people.
That's right.
Nuclear fission? I'll tell you how that's done. See, you got your atoms here.
I just didn't want you to read the whole article.
I'm not reading the whole article, but because they get into, I'll read this part because it gets into Sharpe's ratio. Okay. So the names of the other figures better known are Nobel laureates, Markowitz, groundbreaking 1952 thesis at the University of Chicago.
Markowitz, Efficient Frontier. I'm just telling you.
It's impressive.
He's going to do it throughout the article. I'll just throw out another one. Yeah. Let's see here. Milton Friedman initially argued that it wasn't economics. So William Sharpe tells us switched from medicine to economics because he became queasy at the sight of blood. What does a Sharpe's ratio do for you, Danny? Can you make it simple, please?
So it's excess return divided by excess risk. And so it kind of standardizes a unit of risk versus unit of return per unit of risk, so you can compare different equity sectors, funds within the same sector, but large cap, small cap, or even bonds, and you can compare all.
Sure, and then it's like thanks to Sharpe's ratio, beta or relative volatility measuring a stock's variations against the benchmark was born as a risk metric. And it goes on to talk about Eugene Fama and a couple other things. It's a super interesting article, not helpful one bit.
No.
But here is what's helpful. And now this might sound like I'm about to be self-aggrandizing, and I'm not trying to be. But I think there's a simpler way. So I get the occasional email about screening in stocks. And I think that the hardest, we've talked about this choice paralyzed is like there's 5,200 stocks available to you, not counting OTC, which then you're like in the tens of thousands. And so it's just too many. And like everybody's got their own screening criteria, right? Like, but the basics of what makes a stock go up, I don't think is argued within the shop here. It's those 7 common traits that we talked earlier about. And so years ago, I was on the road talking with someone, and I explained to them the easiest thing I was doing for my folks was just buying ETFs. And so there's a beautiful thing. If you can identify when the market goes into an uptrending phase, and you can do it a number of ways. There's the way that William O'Neill talks about, that's advocated by Investors Business Daily. You could just simply use 2 closes above the 21 exponential moving average. Like there's a number of ways that you can identify for yourself to create a way to identify new emerging uptrends in the market. Right? We're using
the indices, broad market,
using the S&P and the NASDAQ. You don't have to use the Dow. You don't have to use small caps, okay? Because it gets confusing, right? Like not only are there individual stocks, there's like Kathy Woods just talked about this morning, I think on TV, like a new ARK fund on steroids, which I think is just UVXY.
She's getting creamed this year already. Creamed.
Hey, you know what they say, Danny? When you're on fire, more gas, please. And so maybe she comes out of it. I don't know what her funds are doing year to date right now, but she's got a number of them. And so like this thing is supposed to be hyper aggressive. And so it's like, it's so much, right? Like, and then there's that thought that Don really talks well about, the allure or the aura, which is just not true. I have diversification. I've got S&P healthcare, S&P retail, S&P, and you got all these different sectors, and really they're the same stocks just being rotated in and out, or ESG stocks, right? And you're like, well, what counts for ESG? And so, are they doing good? Is Tesla ESG? I don't know. They're electric, but they've got some diesel things burning the chargers so they can run them in rural areas in America. I don't know. Anyway. So I think the simplest way to do it is and I've been waiting for a show like this as we're getting into the new year, right? Not new year, but we're coming close to the end of this year. And now we have some time, like the market's closed on Thursday. So here's what I'm going to tell you, stock nerds. You just heard the first part of the show. If you need an excuse to excuse yourself from a room of people you don't care for, as we get back together after COVID, and you're like, you know what? Oh, sorry. As we get back with people and you're like, gosh, I remember why I didn't enjoy these Thanksgiving get-togethers. But you need an excuse. You can pause the podcast now, save this for Thanksgiving, like after football or whatever, you don't like football, then come back to it. Now you got to go study the markets. We're going to give you some market. We'll give you some red meat. Come back to it on Friday. Don't want to go shopping with the fam? Hey, I got to study markets. Tim's about to talk markets with the fellas. I'm going to do the second. So you paused it, right, on Wednesday night during preparation for the meal. Got to get ready for Friday because it's a half session. And now you're going to come back to it and you're going to learn the rest of the weekend in your eternal market bliss. Right?
Okay, yeah.
So you come back. We started the second half, and now I'm going to show you something I created years ago when I was at Investors Business Daily. And it's just this ETF strategy. Okay, and you don't need IBD for this, but the premise is you can see it on here. The premise is all the same, and this only I don't know why they only do up to October 30th, 2020, and the premise was really simple. When the market goes into an uptrending phase, you buy 50% QQQ, 50% SPY. We have a cough button. I don't know why I didn't use it. I'm sorry.
You do have a cough button. I forgot about that.
So you go in when you're 2 closes above the 21.
Yeah. Or you identify the market as an uptrend, whether you're using IBD or your own system. It doesn't matter. And then when the market, goes under pressure, you sell. You can sell half, and then if it goes into correction, you sell it all. It depends on your risk tolerance. Like it's really flexible. But it produces amazing results, right? And this is only, I don't know why they stopped this return at October 30th of 2020. It's a much higher return now that you're towards the end of 2021 the Nasdaq, the S&P, and this ETF strategy here. And you can see the ETF strategy from when they started running the back testing, to this point is 334%.
Oh, back testing's fictional, not real.
But this is based on their market identifications, and
right.
I
back testing is I just don't trust that.
Well, Danny's saying that. Let me put some clarification to the back testing. Most people who back test will use confirmation bias without knowing it. And would you do it?
And would you actually do the decision? Would you
have
follow the rules,
right? You have, and the rules are quite simple here, and they don't even involve any stocks, and you don't have to worry about beta and Sharpe's ratio or a random walk, which is what the article gets into, and Eugene Fama, his theories on the markets. Like, this is just straightforward, and anybody can do it. It really democratizes investing. And so a lot of people don't realize that I should use the cough button. And
it's a foot pedal, to be fair.
Foot pedal.
It's far away. It's not on the desk.
If I was coordinated. And so what a lot of people don't realize is when you are index investing like this, you are actually actively investing. The way I've outlaid it, you're a very active investor. Because the markets will correct on average about 6 to 8 times a year. In a normal year when J-Powell isn't injecting money.
Well, pull back, not correction. Yeah,
pull back, and so you can be that might not seem active to some people, but what's happening on the inside of the indices every year is extremely active, because companies get bought and sold. Companies don't qualify to be on those certain indices, and so they just rotate them all through. And when you take that factor combined with you darting in and out of the markets, you're not over trading. You're actually you're ebbing with the flow of the markets, and it's a super powerful way to engage in this. And I've done classes on this. I got to dig them up. They're in our look. It's somewhere in here, and I wish I would have found it. I've taught classes on this whole thing, and they're in the Daily Market Insight. I'll go back and find it, and where you can get this, but. If you struggled, and now this is where I'm starting to introduce material towards the end of the year to get you ready for 2022. If you found yourself at home, you got busy with life, you don't enjoy the markets anymore because of, Alex or Hunter, give me a stock that just went up, it looked great, and then the next day it just looked awful, like a pop and drop. Do you have it Nah, there you go. Thank you, man. If you wake up and you're like, I don't enjoy. Oh, there you go. Yeah, this isn't earnings. I don't know. What was this, Alex?
Oh, it was the shape. Monday we had growth stocks got clobbered.
Yeah. So just no random reason. Nothing changed in their business. Like if you find yourself going, you ask a lot of why questions. Like why would Net do that? Why would this stock just it looks great. It's a stable company. Nothing's changed, except the people that own it sell it. You see, and that's the thing. The people that have the most money in the market, the institutional money managers, they really control the market. And that's that whole uprising at the beginning of January, right? Like, you don't control the market, we do. We're Reddit. And no, it turns out they really do control. And when they feel like
they picked a few stocks for short squeezes.
By the way, when the people who control the market feel like they're losing power, you know what they do?
They tighten the grip.
They shut it down, and you can't trade on Robinhood. And so that's what you want the reality. When the people who are losing power feel like they're in power, feel like they're losing control, they just stop playing the game.
Squeeze tighter.
Right. It's better to take the penalty from the FDIC than
they're not even going to get one.
Right.
There's no amount of regulation
they pick
that
up
makes
their toys
this
and
better.
leave. Yeah, right.
Nothing. Like they find Wells Fargo to the cows come home. Do you think Wells Fargo was a better bank, better company, better people? No.
No, of course not.
Same people. Like when you walk into Wells Fargo and I've been here for 30 years. That's the problem. The corrupt way we
like Congress.
Yeah. the corrupt way we were doing it.
That's the problem.
Ingrained in us. Anyway. I digress.
I would only take umbrage with one thing you said, because that system is very easy, but anybody cannot do it. Most people can't do it.
It's discipline.
Because number one, most people don't care and they don't love the markets like we do, and they don't want to sit there and watch it all the time. Right. Number one. Number two, they got jobs and they just don't. But also, then you've also got to follow the discipline and not make.
Well, that's the
room.
thing. So there was an article that came out recently. I will self-admit that I didn't read the article. I read the headline. Mm-hmm. And like, why is Tom Brady so successful still? Like, why is he still in such great shape? Why is his body able to move the way it moves?
Easy as diet.
It's discipline. They cut to the joke, the punchline right away. It's discipline.
I think it's a diet.
That's
part of the discipline.
Not.
But I'm saying that's the number one biggest variable. Doesn't eat processed food.
Right.
Doesn't eat sugar.
Yeah, doesn't even like tomatoes, which are shade vegetable. Like doesn't eat any of that. Like and whether you
great offensive line goes a long way too.
Oh, that's true. Bada bing, Alex.
Hey, that's very true. And so it's discipline. It's having the discipline to do it. No system works. Nothing works without the consistency and the ability to follow through with it. But I think that is a great stopping point. So listen, this weekend. You can go back, stock nerds and market lovers, and it's a real simple test you can do. You can put the SPX up, and you can just find yourself like on a like I'll use the white bar chart here. You can just say, okay, there's the pink lines of 21 where you get 2 closes above it, and then just take your stick drawing figure here, and then you just say, okay, like 2 closes, and then what is the distance between the 2 closes before we get a close below the 21, where that movement would end. And so let me see if I can do it here. This is a shanty way to do it, somewhere down here. That's 5%, like 4.86%. Like that's 5%. But if you're doing QQQ, SPY, or you're doing SSO and QLD, which are doubles, right? And you don't have to go all in, all out. You could do maybe a quarter of your portfolio, a half of your portfolio. There's a number of ways to vary it to adjust to your risk. But the bottom line is there's something you absolutely can do that doesn't have to be. I mean, this could have been the best article ever, but it wasn't, because the history of the index fund is interesting to me, right? But he didn't get into how they're manipulated. The average company lasts about 15 years on the S&P 500, and what happens. And then Don brought up a great point earlier. It's only Wednesday, right? It had to be on Monday. Or Don, am I allowed to tell? Let me just change it all up, but with the same premise. Somebody in Don's World, right, which is next to Walt Disney. You go to Universal, Walt Disney, Don's World. It's in Jacksonville. It's where Urban Meyer's grinding it out. And so...
hey now.
Hey now.
That was nice.
So... I like
Keep going. Keep going.
Go on. Yep. Right. Sorry. Got
1 hour show.
Got caught up on the Urban Meyer joke. Okay. So, sorry. So, this person owned XYZ stock, right? With the instructions, don't ever sell it. Okay. Mm-hmm. And my very first thought was, that's what somebody once said about Sears. That's what somebody once said about Hewlett Packard. That's what somebody once said about AT&T. And it's that kind of eventually, that works for a time. There's going to be a day. Like somebody today, right now, is saying, don't ever sell Amazon. Don't ever sell Google. Don't ever sell Facebook. But the truth of the matter is their day will come where it's done. And you're like,
and both of Bezos has even said that. He said Amazon probably won't be here in another 10 in its current iteration.
Yeah.
Facebook just went to Meta just to be relevant.
Yeah. And so you can't imagine it because it's the world you're living in right now. But there's going to be a day where you don't have to hold Amazon because it's not going to be. It's going to become Sears. Maybe it won't be bought by a hedge fund manager and then run into the ground, but something will happen where it becomes the next Sears. And so when you do the indexing the way I described, you don't get left holding the index bag in case the 2008 hits, or you get caught up in a 35% decline in March of 2020. But there's a churn inside. Like once Sears wasn't Sears, they kicked it to the curb. Mm-hmm. Not soon enough, but they kicked it to the curb, and it was out of the S&P 500. And so something to think about as you formulate your battle plan for 2022. So with that, let's go to Hunter. Let's go to Alex. Let's get Don. And then Danny's probably got something to say. The Spice King. on the
King of the
Mayflower.
Spice.
Remember, the King of Spice. Tiger King, Spice King, Santa Maria.
I know it's nerdy. At
Plymouth
some point,
Rock.
I got to do a Dune one with like the Spice melange, and I'll make them look like Paul Atreides. It'll be amazing. Yeah, it'll be great.
All right, go ahead, Hunter.
And 5% of our audience will get it.
What did he say?
Hey, that movie's huge now. Come on.
What did he say?
5% of our
blockbuster
audience
film.
will get it.
All right, go ahead, Hunter.
All right,
We're going to
well,
mute Tim.
I've got some stuff in some different sectors today. So a little bit of oil, steel, financials, and some agricultural stocks as well. So Tim, we're going to start with the oil names. And I've been talking about MTDR for a couple of weeks now, as well as FANG, F-A-N-G. Those are two of the better looking names on a fundamental and technical basis.
Right there.
In the XOP ETF, that is the oil and gas exploration ETF. So these two have recently gotten back above the 21 after a little shakeout to the 50. Really the first test of the 50 for both of these since a pretty incredible move going back to the start of September, more or less, on both of them. So both of these names have acted well the last 2 days. We're getting confirmation in that regard on oil stocks today. This is their third day up. So, Tim, if you'll pull up XOP, that is the ETF that encompasses these two names. And you see that is also poking its head back above the mean today. So confirmation from the ETFs, the stocks acting stronger than the ETFs. That's always something to pay attention to. And then one last one in this group, DVN, Devon Energy. This is a leader today, up about 5% with some volume. I actually bought this in my tracking portfolio yesterday. But what's interesting here on DVN is, once again, very similar fundamentals to FANG and Matador. So very good revenue growth over the last couple of quarters, EPS growth, et cetera. But DVN has gone from about 880 funds owning it to about 1,600 over the last 4 quarters. So some pretty massive fund ownership growth on a big scale level too. It's not like it went from 200 to 300, from around 880 to 1,600 over the last 4 quarters. So DVN with some big fund growth. Steel names, NUE would be the top one. We do own that in Grotection. This one had a really nice day, 20. And you got it there, NUE. There we go.
Yeah, we're good.
So this whole steel area has been strong. You could pull up NUE, which I think is probably the best. STLD also looks good. Even some of the lesser known names like AA, Alcoa, CLF, Cleveland Cliffs, some of those have started to shape up, get back above their moving averages as well. So the steel area holding up and acting like it should. Now we're watching NUE here. It's not very far from the 8-day after a big move up with volume. Be interested to see how it acts there. So steel acting well, oil and gas acting well. And we've also seen a little bit of divergence between big finance and regional banks. So Tim, will you pull up JPM for me?
Wait, who's the CEO?
JP Morgan.
Yeah, who's the CEO?
Diamond.
Jamie Dimon kind of stepped in it with a small little off-the-cuff China joke yesterday.
Yeah.
Did he?
Yeah.
I saw that. So the interesting thing here is it looks like some of these bigger banks like JP Morgan, Goldman, they got sold off pretty hard for about like 8 days in a row. You can see, let me count these, 1, 2, 3, 4, 5, 6. Looks like almost 10 days down in a row for JPM before it ultimately bounced here over the last 3 days. But we see the same pattern on JPM, Morgan Stanley, Bank of America, Goldman Sachs, what have you, where they either pulled back to the 50 and the 21 or right around there, and then have bounced over the last 3 days and got back above it. So some positive action for some of the bigger finance names. But Tim, if you'll pull up SIVB, we really didn't see the same type of selling in this regional bank. So SIVB has actually held up at the 21. Another regional bank leader, WAL, looks a lot more similar to what we saw there with JP Morgan. Pulled back to the 50, has now gotten back above the 21 and the 8. So those names starting to shape up and look good. We've added some exposure in that area over the last week or so in Grotection as well. And then lastly, an area that had some brutal shakeouts not very long ago is chemical agriculture. Tim, will you pull up NTR, please? Nutrien. This one had a earnings not very long ago, probably 2-3 weeks ago, and since that has been done, it's been forming a nice little base, if you call it there, right on the 50 and the 21. Just over the last 3 days, has poked its head back above the 21, slightly down today. But you also have CF, which looks good, and then SQM was a recent gap up that actually didn't hold up that well, but SQM is still above the 8-day. So you've got 3 names in this chemical agriculture space that have pretty good looking charts, especially when you compare it to what we've seen on a lot of the growth stock charts over the last week or so. So this chem ag space is still holding up. The one laggard, Tim, is MOS, which may be the most well-known name here. It doesn't look anything like the 3 charts I've just showed.
Wow, that's totally different.
Super. And that one has been a leader more often than not in this group, but not right now. So that's all I got. I know that was kind of a lot in some different sectors, but I wanted to bring those names to everybody's attention in some sectors that are working and showing strength while growth has been pulling back.
All right. I really enjoyed that. Go ahead, Alex. What you got, buddy?
Yeah. So I found a couple names that were pulling back to their 50-day moving average and showing nice positive reversals after that sharp sell-off this last few days. If you could pull up ZI. So that red line is the 50-day on Tim's chart. When I see a stock like a leading or trending name that comes down to the 50 and then cuts underneath it by like 1 or 2% and then reverses higher on the day, that's kind of a bullish signal. I do not own this, but I'm watching that one. Then another name that's doing the same thing is Hubs, HUBS. Same story. I think that these shakeouts sometimes aren't necessary to get the weak holders out. And the trend, though, if you draw a trend line, a support trend line on that 50-day, it really hasn't violated anything. And this is another one I'm thinking about buying. I haven't done it yet. The one that I did buy, not off the 50-day, based on the century level mark, was the trade desk, TTD. This pulled back to a previous pivot around that 98 level yesterday and then reversed up above the century mark, the Livermore area of $100. If that may be a new sign of a support for the stock. This is a leading name, and that gap up you see on the left with that volume is a really good sign. There's a lot of those. It just comes down to what stock can hold up when the market pulls back. And on Monday, when the growth stocks were coming down, this was one of the few names that didn't get walloped by like a down 10% day. It was only down a couple of percent, which tells me that the holders in there, they're not going anywhere at the time right now. I want to go over Affirm because that's a name that I've been on for a while, and we did sell, and I sold myself. I got stopped out. If you can pull up Affirm real quick, and if you could pull up the weekly, actually, the furthest chart you can give me.
You want monthly or weekly?
I think weekly would be great. Yeah. So I did a longer term study on this, and I found a chart back from 1997. It was actually Yahoo 1997 had a 40-week big cup, and it also had a handle. And what I'm thinking is happening, I'm trying to use that as a precedent for the stock, that this is the handle that maybe that it needed, and maybe it will resume higher in the next year, depending on the market and the rally, if we stay intact. But now I'm starting to get even more bullish on this technically on the long term, because if you just have the cup without the handle, sometimes it's the odds of it going higher are not as high as if it has a handle, and that's why it's called the cup and handle, not just a cup.
And you're saying that cup is that whole bowl on the entire
that whole bowl, and
yes,
okay. See, and Yahoo's back in 1997 was 40 weeks long. 64 weeks long. This one's 40 weeks, so it's very similar. But Yahoo ended up going up 35x. Now, I'm not saying that this is going to go up 35x, but maybe it does go up. Who knows? I can't predict that. I'm not in that business of making predictions. But I like to use precedents because history repeats itself, especially when there's fundamentals and a story behind a stock and a raging bull market. That's what I found. I went through a lot of charts from that era of 97, 98, 99, and Yahoo. If you can find a way to look at that chart, which I found on I think it was FinViz, you can pull up all historical charts. That's what I found. MarketSmith also has it. You can put the year in and then the stock, and it's pretty neat. So if our viewers have that access, if they don't email us, I can send you a screenshot of what Yahoo looked like back in 1997.
Alex, can I add a few comments there on a firm?
Yeah.
I can't. I don't think you can see it as clearly on TOS here, but if you're looking in MarketSmith or just looking at the 120 level in general, pretty much right there where a firm bounces. If you look horizontally across the chart back to when it IPO'd, that 120 level is going to be pretty important moving forward. So those lows put in just 2 or 3 days ago, I think 118.98 is what's showing up there. That's going to become an important level. And then I texted Don and Alex this morning. What I'm looking for is for a firm to get back over 140, show some closes above the 50 and the 21 and get those moving back in the right direction. Right now, it hasn't done that, but it is worth noting that it's showing relative strength today and is coming up off of that 120 level. So the 120 level is an area of importance support now on this name. Yeah.
You're saying, okay.
And so that the thing here is, that 120 level is acting as support, but a lot of people have gotten shaken out because that was not necessarily. I mean, you were looking at the previous pivot of 147 as being support, the 150 area of being support, the 50-day, the 21, all of those common areas where investors or traders would have assumed we would get some support really got blown through, as did a lot of other growth stocks in regards to their moving averages. But now we see that 120 level may have some importance. So that was really my point, is to watch that 120 level and then watch and see if a firm can get some closes back above 140 and above those moving averages.
All right. Alex, do you have anything else, buddy?
Yeah, one last thing I wanted to just review. If you could pull up Square and then CrowdStrike. Just because a stock last year ran and was a leader doesn't mean it can be a leader again. This is a broken chart, not a broken company. There's a difference. But the chart, obviously, it needs a lot more time. Don't marry your stocks. It's one thing to follow and have a stock on your watch list and do homework on it. It's another just to be completely distracted because you're being stubborn. And I mean, we're all at fault of doing that. I've done that before. But stay away from stocks like this, especially ones that are under their 200-day moving average. That's a no-no. This would take a lot of time to break back above and show some RS. So I think that it's important to follow leaders like TDD, like we mentioned. I think you brought up Unity Software before. I mean, I got shaken out. I bought it to extend it. I make mistakes, and it's bouncing off that 21. That would probably be a better risk area to get in. So maybe I buy it back. I'm trying to it's the day before a holiday. Kind of want to wait and be a little bit more patient on my buys. So, but yeah, that's pretty much it.
All right. Don, the captain of the 21 over 21, the Dirty 30 levels.
Don.
Yeah, Don World. Steering the ship of the 21 over 21. So I'll have tonight's video Wednesday night. We're taping the show Wednesday. Thursday holiday. So Friday video.
Half day Friday,
Yeah, Don, you going to do the 21 over 21 on Friday afternoon in the shortened session?
Absolutely.
There you go. All right. So I'll tell you what, Don, anything you want to cover right now?
Yeah, so if I'm here in the ship of the 21 over 21, it hit a little bit of an iceberg on Monday morning. And that's the type of feedback that we're always looking for in the market. One of the process improvements that we put in after the stealth bear market in February and March was, if you've watched our videos, we're constantly monitoring something we call the G5. That stands for the Growth 5 ETFs that are pretty much the pulse of what's going on in growth stocks. So we monitor them constantly throughout the day. We noticed Monday morning, we came in, we had a lot of exposure, and the markets gapped up. They were looking pretty good, but the G5 was lagging. So immediately we're on notice that if these are leading stocks in the market, they should be higher with the indexes higher, and they just weren't. So we're texting back and forth, and before you know it, the market reversed, and these reversed extremely harshly. Hunter's shown a couple of, in his videos last night, some of the stocks that just got absolutely taken apart, stocks that are recent leaders like Upstart, Team, Crowd, Snow, Dash, Sun, VOCN. Stocks shouldn't be down 15-20% in one day if they're leadership type stocks. And we noticed a lot of the components of these G5 indexes that we track were doing that. And we also noticed some weakness in some of the things that we were holding. So we immediately tightened our stops, got stopped out on a few things to the downside. And it's acted extremely well. Now we had a follow through to the downside on Tuesday. We cut a couple of more things, but the overall indexes still, for the most part, were holding up pretty well. The NASDAQ 100 bounced off the 21-day moving average. The S&P didn't even get to the 21-day moving average. Small caps broke the 21, and we were reflecting this in the nightly videos that we do by how bullish we are across our leadership and the 3 time frames that we track. And we immediately downgraded on Monday the leaders because, again, it's a change in character on leaders. I mentioned how we cut exposure, and we really had not much of a drawdown at all, about 1.5%. So that part of the aspect worked, and then of the process worked. So then the next thing you look at when the markets are not acting well is what is bucking that trend. So I mentioned that we had follow through downside in the leadership indexes, the G5 on Tuesday. So now we want to say, okay, what stocks didn't break their Monday's low? These are showing extreme strength in the face of a sell-off in growth stocks. And Alex mentioned TTD. We own that now. And Etsy was another one that they did not make a lower low on Tuesday. And the volume, there was just no selling volume there. If you want to bring up a chart of Etsy, please. See how you see the big pullback on Monday, the big yellow candle. Notice no further price progress down on Tuesday. Notice the strength on Wednesday. This morning we bought Etsy. Now keep that exact same chart that you have there and bring up IWO. This is the growth component of the Russell 2000. Look at that lower low on Tuesday. Now, Etsy did not make that lower low. That's the second candle from the right there. Bring up FFTY. These are the 5 components of the G5 that I'm talking about. Again, you'll see the follow through to the downside on Tuesday out of Monday's ugly candle. Bring up ARKK.
I was going to say that's got
follow through to the downside on Tuesday. And bring up QQQJ. Follow through to the downside on Tuesday. And finally, PDP. So you notice those are the 5 components of the G5 that we track. A lot of the stocks that we own and a lot of growth leaders that we don't own just got absolutely bludgeoned Monday with follow through downside of the Tuesday. No follow through downside on Tuesday for the 2 that we purchased. And the markets are holding Tuesday's low now and bouncing at the 21-day moving average, meaning the S&P and the NASDAQ 100. So the markets are holding up pretty well. This was all hidden under the indexes as the Dow barely budged, the S&P barely budged. But under the surface, and this is what we look at, what are the leaders doing? So we raised a substantial amount of cash on Tuesday and Wednesday, put some of it back to work in some things that are working. We also added to energy and steels and financials, which are working on Tuesday, and then added these 2 growth leaders to our portfolio as they're showing relative strength in the face of a sell-off in a lot of the overall growth stocks. So that's the type of thing that we do on a daily basis here. Always looking for those basketballs underwater that are resisting the market pressure. When the market pressure comes off, it's like letting go of the basketball underwater and it shoots to the surface and goes higher. Etsy and TTD are two examples of exactly what we're looking for. Of course, we've got our stops in place on both of them. Our stops are limited to 0.2% of each new position that we take. So we could buy 5 new stocks they could all go down and hit our stocks, and the portfolio would only be hit by 1% overall. That's a paper cut. We can take several paper cuts, but then when the market heals, these things burst higher and carry our accounts with it. And I'll talk about some of the things on the Friday video that got cut out of the 21 over 21. We nipped the iceberg, but we were able to patch the boat. Let's put it that way, if you want to go with a few cliches. And markets overall holding up pretty well. It was just growth stocks that got hit. We didn't want to see a repeat of the growth stocks were down 20%. And people say we haven't had a big correction in a long time. That's just not true if you look at different components of the market. We were down 20% in 3 to 4 weeks in February and March. And Monday was a shot across the bow. Tuesday was a little bit of follow through, but for now, they stopped going down and the best are bouncing. And that's what we're always on the lookout for here at Revere.
And the growth stock markets were down 20. We weren't down 20, but the growth stocks were down.
Yeah, growth stock markets were down.
Right. Kathy Wood's ARK fund is down over 30, I think.
No, I just did it. It's minus 20.
Minus 20 now?
Minus
okay.
20. All right, Don, was that it?
That's it.
Okay, awesome. And look, if you want to find Don's video, real quick, go Daily Market Insight, Revere Asset, of course. Daily Market Insight, and then it'll be like here was Hunter's video from last night, Don's video from Monday, and then you'll see I'll have a video here, and then Don will have a video. So super duper easy to find. Danny, now normal outro, okay? Mm-hmm. Now do the short one, okay? Not the long one. Normal outro, and then I've got one last thing for you.
And then you throw it back to, all right. Hey, Don, real quick, though, I wanted to let you know, do you know what the rodeo clown is really called? Oh, the correct name?
The Stewart?
Bullfighter. A rodeo clown is actually a bullfighter.
Really?
Bullfighter? Yep, that's what they call it.
Did
Yeah.
not know that.
Yeah, you don't want to call a rodeo clown to his face. He might take the smirk off.
There's some
his
tough
face.
dudes.
Oh, yeah. Oh, for sure. Let me go touch this 2,000-pound animal with horns on the nose to help this cowboy get away.
I went to like a legit like NFR type rodeo event once, and I'm like, wow.
Oh no, they're unbelievable. So where my wife, the small town my wife's from, two twin brothers were at different years were the world champion bullfighter.
Really?
A couple years. Yeah. He came and sat. We were watching the high school football game, and I was next to Miss Bill. That's AK's mom, Billy. Yeah. They call her Miss Billy. So I was sitting next to her, and this guy came up. It's Ronnie and Donnie. I can't remember their last names, but Ronnie came up and sat down, and she introduced me, and we were just talking and stuff. And all these like kids, like these like elementary school kids are walking up, looking at him and staring, and I couldn't figure out what was going on. And finally he said, well, see you later, and walked off. And I said, he's a really nice guy. I said, but all these kids kept coming up. What's his name? She goes, well, he was a world champion, bullfighter 2 years in a row.
So, I'm sorry.
That's where I learned you call them a bullfighter, not a rodeo clown, because I did that also.
The Venus and Serena of bullfighting, huh?
Wow, yeah.
Ronnie and Donnie, rodeo clowning.
Will Smith to make a movie.
Anyway, folks.
It's like an alternate world.
Anyway, folks, like Tim said, have great expectations and don't settle. Listen, please tell a friend, tell a neighbor, send them to revereasset.com. They can sign up for our daily market insight newsletter, and they can also get this podcast delivered as soon as we produce it. We don't spam them or reach out to them in any way. It's up to them to reach out to us if they want a complimentary portfolio review or they just want to ask questions or have a topic they want to talk about. You can always email us at dan@revereasset.com, Don, Tim, Alex, or Hunter at revereasset.com. And you can always call us old school at 855-REAL-WEALTH.
Okay, so it's been really painful this whole project, but let's see here. So it's coming together. Yeah, look at your screen.
Oh my gosh.
Oh,
there you go. There you go, baby.
God almighty. Oh my gosh. Look at this.
Well, the screen on my phone was delayed a little.
Yeah, there's a bit of a delay. Yeah, it's fine.
Oh, fair enough. So you've seen all this. It's I'm trying to get it hammered out now for mobile. Wow. But like we've got one legit picture here. But you can click tomorrow's inside. They're porting over, Danny, and it's so a lot of data. Right, Stockners don't realize, and we're going to get some. It'll say watch the video here, but a lot of people don't realize that we all the videos that are here. Like there's 2014.
Years,
a lot.
It's so we do 6 videos a week, or it was 5 videos plus a podcast.
And then Alex sometimes does a bonus.
Yeah, but for 7 years, like we've been producing consistent content. They're in the process of porting all that over,
and a lot of that is video.
It's taken a while, and so but it's coming together, and hopefully all this is starting to be filled out and rounded out. But you'll be able to you'll click, just like normal.
Be a lot smoother.
Yeah, and then there's a bottom button to subscribe if you want to subscribe to the videos. It's
a lot trendier design. Yeah,
yeah.
Like lots of more rounded edges.
And like
not so harsh.
There's some processing that needs to take place here as they keep filling it
Color
back up.
scheme.
Yeah, and then this will go from Vimeo to YouTube, but it'll progress update here. We're getting closer. Like, let's see if it even plays. Yeah. So there's still it's a Herculean task apparently to port all this over. I had no idea. So they're
it's because it's the volume of data.
Yeah, and so they're in there, and then at the bottom, like you'll see strategy blog. We'll change a little bit of this contact. Subscribe. You can do links to just get all the content easily delivered to you. Sign up for the daily. We're going to change this from daily newsletter to tomorrow's insights, but we're getting there.
I like those.
All right, folks, listen, have a happy Thanksgiving. And if you're traveling this weekend to go see your loved ones, be safe. And we'll talk to you next week on Your Money.